Hi everyone, it's Sean from STK Markets here today. I want to wish you all a Merry Christmas. We're just doing a recap of what happened in 2023 calendar year. As always, we like working with our partners. We've got John Forwood here this morning from Lowell Funds Management. We've been watching John for years. His portfolio is focused on the small cap resource sector, as you know, which we're very big in also. Good morning, John, and Merry Christmas. Thanks for coming.
Sean, yeah, Merry Christmas to you. Great to catch up. Be the last one for the year, and yeah, thanks for your support through the year. It's been a very interesting year, a little bit up and down, but we seem to be, at least at LRT, finishing on a bit of a high. So pleased to be able to come and give a bit of a recap.
Yeah, well, we're very pleased with that last point that you said, John. We certainly bought a lot of shares when the markets were at their weakest in your fund, and we've done extremely well out of it on market. We bought those. So thank you so much for those good results. Our clients are very, very
Thanks,
happy.
Sean. Great. Thanks for the support.
No problem. So we'll get straight into it. This year, it's been a bit of a topsy-turvy one. Can you sum up the markets in the resource sector for this year and your portfolio, please?
Yeah, it has been a topsy-turvy one. That's a nice way of putting it, Sean. Look, most commodities over the last 12 months have been down in US dollar terms. There's only a couple that have actually finished the year up, and the ones that spring to mind in particular are uranium, and iron ore has actually done quite well as well, which says something interesting about how the Chinese economy is actually going. So a lot of fallers in terms of commodities, and a lot of fallers. It's been a very tough year in general for the junior resources space. So we've seen the lithium price down nearly 80%. Lithium prices down nearly 80%, almost in free fall. But counterintuitively, there's been a huge amount of interest in lithium, and that's something that the fund has really benefited from. So managed to swim against the tide somewhat as a result of some good calls in the lithium space.
That's fantastic. We're heading into 2024 in a couple of days. Do you think we're going to have as much volatility next year? Do you think it'll be as topsy-turvy? Hard to say. Do you see markets starting to get back on track? I mean, interest rates in the US have started to hint that they could be coming back, which obviously bodes well for small caps. Do you see 2024 being a better year moving forward?
Yeah, look, I think we're seeing, the last quarter of this year, and maybe we'll look back, in 9 or 12 months' time and say October 2023 was the bottom for junior resources, small caps. Certainly, the mood now is that disinflation is breaking out all over the place. US inflation is down well under 3%. Euro inflation is probably closer to 2%. And China's economy has been deflating for a couple of months now. So that, as you mentioned, bodes well for interest rates, and that flows through to a number of positive factors for the junior resources sector.
Okay, fantastic. So with these theme of falling interest rates potentially for next year, how's that going to affect your portfolio? I mean, you traded well this year. I mean, we know that we've invested jointly in like Southern Cross Gold, which has just outperformed the market sensationally. And you're a big supporter of that on the pre-IPO and IPO. So thank you for helping us there. And obviously you got very well rewarded. But are we sort of sitting in a market now where your portfolio can actually continue to outperform, even in a market which potentially could be going up?
Exactly. So hopefully we get a double positive here. For example, as interest rates fall, presumably that they will start to come down at some point during 2024. You should see gold, the US dollar gold price strengthen. US dollar itself might weaken as well. You saw a couple of, if you like, sort of false starts during this year, 23, in terms of the gold price. I think back in May, Jerome Powell said we're closer to the end than the beginning in terms of interest rates, and gold leapt over $2,000 an ounce and then fell back again. But then, late in the year, we've seen more comments along those lines from the US Fed, and the US dollar gold prices, finishing above 2,050 an ounce at the moment. So look, if interest rates do fall, then we'll expect to see gold price strengthen, but we'll also expect to see the additional effect of more interest in the speculative end of the market. So, and that's where the junior resources end is, and that's where we play. So, we're about 30% exposed to the gold gold price at the moment in terms of our portfolio of commodity exposure. So we should be getting a double whammy if that happens.
Okay, John, that's really interesting. Well, I wish you the best of luck for next year. You certainly pulled a rabbit out of a hat with the way the market performed this year and how your portfolio excelled. So just wanted to say congratulations again there. Thank you very much for the time, and we wish you a happy new year and a prosperous 2024.
Oh, thank you, Sean. And, likewise to you. Hopefully we can, the last 5 years, I think we've done over 25% per annum compound. And, we're looking at, trying to do the same in the next 5 years. So let's hope for a good year ahead.
Good luck, John. Thanks a lot. I look forward to seeing you in the new year.
Likewise, Sean. Thanks very much.